Neobanks burst onto the scene with bold promises to revolutionize the way we handle our money. Unlike traditional banks with their brick-and-mortar branches, these digital challengers offered sleek apps and instant access, making banking feel more modern and accessible. The excitement was palpable. Could these fintech innovators really change the rules of finance for good? In this relaxed exploration, we'll dive into what neobanks set out to achieve and take a closer look at whether they've lived up to the hype. Let's unpack how these new players have shaped the banking landscape and what their rise means for the future of money. Neobanks emerged as digital-first alternatives to traditional banks, aiming to simplify financial services and make banking more accessible. The story of Revolut's creation is particularly memorable. It all began during a weekend in Las Vegas, where the founders realized just how frustrating and expensive it was to manage money across borders. This experience sparked the idea for a new kind of bank, one that would eliminate hidden fees and offer seamless global transactions. Inspired by this vision, Revolut and other neobanks quickly gained popularity, promising a fresh approach to everyday banking. Neobanks set themselves apart from traditional banks by operating entirely online, without physical branches. This digital-first approach allows them to offer streamlined services, intuitive apps, and often lower fees, appealing especially to tech-savvy customers. Their rise in popularity can be traced to the convenience and flexibility they provide, making everyday banking faster and more accessible. Unlike traditional banks, neobanks focus on user experience and rapid innovation, quickly adapting to changing customer needs. This fresh perspective on banking has attracted millions of users worldwide, eager for a modern alternative to the old ways of managing money. Revolut has quickly become a standout in the neobank world, reaching an impressive 60 million users by June 2025. In 2024 alone, the company saw its revenue soar to $4 billion, marking a remarkable 75% increase from the previous year. Much of this growth came from its wealth unit, which includes cryptocurrency and stock trading, and saw revenues nearly triple. By diversifying its services, spanning spending, saving, trading, and borrowing, Revolut has managed to carve out a significant place in the evolving digital banking landscape. Revolut has built its success on 5 key revenue streams, each playing a crucial role in the company's rapid growth. The spending category includes fees from card transactions and currency exchanges, while saving services generate income through interest and account management. Trading, which covers both stocks and cryptocurrencies, has seen remarkable expansion, especially within the wealth unit. Borrowing services such as personal loans and credit products further diversify Revolut's income. Notably, the wealth unit has become the fastest growing segment, reflecting the rising demand for digital investment options among users. N26 marked a major milestone in 2024 by achieving its first profitable quarter, reporting a net operating income of 2.8 million euros. This turnaround was the result of focused strategies, including expanding its product offerings and tightening compliance measures. By diversifying its services and improving operational efficiency, N26 managed to boost revenue while keeping costs in check. These efforts not only enhanced profitability, but also strengthened the company's position in the competitive neobank sector. The success of N26 highlights how targeted innovation and sound financial management can drive sustainable growth in digital banking. Wise, formerly known as TransferWise, has carved out a strong position as a leader in international money transfers. The company stands out by offering transparent fees and competitive exchange rates, making cross-border payments more affordable for millions of users. Wise's platform is designed for simplicity and speed, allowing customers to send money globally with just a few clicks. By focusing on efficiency and customer trust, Wise continues to maintain its competitive edge in a rapidly evolving financial landscape. Most neobanks have found it challenging to achieve profitability, and a big reason comes down to the high costs of attracting new customers. For example, Revolut's customer acquisition cost in 2023 exceeded $200 per user, which puts significant pressure on their margins. On top of that, neobanks face strict regulatory requirements, leading to additional expenses for compliance and risk management. These hurdles make it tough for digital banks to scale efficiently, and as of 2025, about 80% of neobanks remain unprofitable. Balancing rapid growth with sustainable business models remains a key challenge for the sector. Despite the buzz around digital banking, the numbers tell a more complex story. As of 2025, nearly 80% of neobanks are still operating at a loss. High customer acquisition costs and ongoing regulatory expenses continue to weigh heavily on their bottom lines. Even with rapid user growth and innovative products, most neobanks have yet to find a clear path to sustainable profitability. This reality highlights the significant challenges these digital challengers face in turning popularity into lasting financial success. Revolut stands out among neobanks for its ability to achieve significant profitability, a milestone that has eluded most of its competitors. By diversifying its revenue streams, spanning spending, saving, trading, and borrowing services, Revolut was able to generate impressive growth, with its wealth unit alone seeing a 298% revenue increase in just 1 year. The company's focus on expanding product offerings and tapping into fast-growing segments like cryptocurrency and stock trading played a crucial role in this success. Other neobanks can learn from Revolut's strategy of not relying solely on traditional banking services, but instead embracing innovation and adaptability to meet evolving customer needs. This approach demonstrates that with the right mix of services and a willingness to evolve, profitability in the digital banking sector is within reach. Neobanks have certainly shaken up the financial world, but their journey is far from smooth. Scaling up their user base often means investing heavily in marketing and customer acquisition, which can quickly eat into profits. At the same time, these digital banks must navigate a maze of regulations that differ from country to country, adding layers of complexity and cost. Balancing rapid growth with strict compliance remains a constant challenge, making profitability elusive for many players in the sector. Despite these hurdles, neobanks continue to innovate, searching for the right formula to achieve lasting success. Traditional banks are no longer standing on the sidelines as fintech companies disrupt the financial landscape. Instead, they are actively embracing digital innovations, integrating advanced technologies like mobile banking apps, AI-driven customer service, and real-time payments into their offerings. Many banks are also choosing to collaborate with neobanks, forming strategic partnerships that blend the stability of established institutions with the agility of digital challengers. This trend, often called co-opetition, allows both sides to benefit from shared expertise and resources. As a result, customers are experiencing more seamless, innovative, and convenient banking services than ever before. In recent years, the financial industry has witnessed the emergence of co-opetition, a blend of competition and collaboration between traditional banks and fintech companies. Instead of viewing each other solely as rivals, these organizations are increasingly partnering to leverage each other's strengths. Banks benefit from fintech's innovative technologies, while fintechs gain access to established customer bases and regulatory expertise. This strategic approach allows both sides to adapt more quickly to market changes and deliver better services to customers. Ultimately, co-opetition is reshaping the industry, fostering innovation and efficiency in ways that pure competition could not achieve alone. Central bank digital currencies, or CBDCs, are digital forms of a country's official currency, issued and regulated by central banks. Unlike cryptocurrencies such as Bitcoin, CBDCs are backed by the government and designed to function as legal tender. Central banks are interested in CBDCs because they offer the potential to modernize payment systems, improve transaction efficiency, and enhance financial inclusion for people who may not have easy access to traditional banking. If widely adopted, CBDCs could reshape the financial landscape by making payments faster, reducing costs, and giving central banks more direct control over monetary policy. However, their introduction also raises important questions about privacy, security, and the evolving role of commercial banks. Decentralized finance, or DeFi, has rapidly emerged as one of the most transformative forces in the financial world. Unlike traditional banks, DeFi operates on blockchain technology, allowing users to borrow, lend, and trade assets without intermediaries. Since 2022, DeFi borrowing alone has surged by an impressive 959%, reaching $19.1 billion in 2025. This explosive growth highlights DeFi's potential to make financial services more accessible and efficient, challenging the dominance of established banks. As the technology matures, It could fundamentally reshape how people interact with money and financial products. Embedded finance is changing the way we interact with money by integrating financial services directly into non-financial platforms. This means you might access payment options, loans, or insurance right inside your favorite shopping app or ride-sharing service without ever visiting a traditional bank. By making these services more accessible and seamless, embedded finance is removing barriers and creating new opportunities for both businesses and consumers. Experts predict this market could reach $7.2 trillion by 2030, highlighting just how significant this shift could be. As financial tools become a natural part of our digital lives, the lines between banking and everyday activities are becoming increasingly blurred. Artificial intelligence is rapidly transforming the financial sector, introducing smarter, faster, and more personalized banking experiences. From AI-powered chatbots that assist customers around the clock to advanced algorithms that detect fraud in real time, these technologies are reshaping how banks operate and interact with clients. The financial services AI market has already reached over $115 billion, and it's expected to more than double in the next few years. As banks adopt AI for everything from credit scoring to investment advice, customers benefit from greater convenience, enhanced security, and tailored financial solutions. This wave of innovation is setting new standards for efficiency and customer satisfaction across the industry. The arrival of tech giants like Google, Apple, and Amazon in the financial sector is shaking up the industry in remarkable ways. These companies are leveraging their massive user bases and advanced technologies to offer services such as digital wallets, payment platforms, and even lending solutions. Their entry is not only intensifying competition with traditional banks and neobanks, but also accelerating innovation across the board. As a result, consumers are seeing faster, more convenient, and often cheaper financial services. This growing influence of big tech is reshaping the future of banking and financial technology. When we look under the hood, neobanks and traditional banks share more similarities than you might expect. Despite their sleek apps and digital-first approach, most neobanks still rely on the same core banking infrastructure as their older counterparts. This means they often face similar regulatory hurdles, compliance requirements, and even limitations in how quickly they can innovate. While neobanks excel at user experience and accessibility, their dependence on established banking systems can restrict their ability to truly revolutionize financial services. In many ways, the digital banking revolution is still working within the boundaries set by traditional finance. The regulatory environment plays a crucial role in shaping the strategies of neobanks. As digital banks expand, they must navigate a complex web of financial regulations, which often differ from country to country. Compliance costs can be significant, sometimes exceeding $200 per new customer, and these expenses directly impact profitability. To stay competitive, neobanks are investing heavily in compliance measures and adapting their business models to meet evolving standards. Ultimately, the ability to manage regulatory challenges effectively can determine whether a neobank thrives or struggles in the fast-changing financial sector. Neobanks are constantly evolving, introducing a range of new products and services to stand out in the competitive financial landscape. Beyond basic checking and savings accounts, many now offer features like cryptocurrency trading, stock investments, and even personal loans. This diversification helps them appeal to a broader audience, from tech-savvy investors to everyday savers. By expanding their offerings, neobanks are not only attracting new customers, but also creating multiple revenue streams, making their business models more resilient. These innovations are reshaping what people expect from their banks and pushing the entire industry forward. User experience and mobile-first design have played a crucial role in the rise of digital banks. By prioritizing intuitive interfaces and seamless navigation, neobanks have made managing finances more accessible and enjoyable for users, especially on smartphones. Features like instant notifications, easy money transfers, and real-time spending insights have set these platforms apart from traditional banks. This focus on convenience and simplicity has attracted millions of customers, particularly younger generations who expect banking to fit effortlessly into their digital lifestyles. Neobanks have taken ambitious steps to expand globally, targeting markets far beyond their home countries. Their strategies often involve launching user-friendly apps, offering low fees and tailoring services to local customer needs. However, entering new regions isn't always smooth sailing. Regulatory hurdles, cultural differences, and stiff competition from established banks can slow their progress. Despite these challenges, neobanks continue to adapt, seeking partnerships and innovative solutions to gain a foothold in diverse markets around the world. Neobanks are harnessing the power of data analytics to better understand their customers' needs and preferences. By analyzing transaction histories and spending patterns, they can offer personalized recommendations, targeted promotions, and even proactive financial advice. This level of customization helps users feel more connected to their bank, increasing engagement and satisfaction. Additionally, real-time insights allow neobanks to quickly adapt their services, ensuring that customers receive relevant features and support when they need it most. Open banking regulations and the rise of APIs have dramatically reshaped the financial services landscape. By requiring banks to securely share customer data with authorized third parties, these rules have leveled the playing field between established banks and digital challengers like neobanks. Neobanks can now offer innovative services more easily, tapping into data that was once locked away by traditional institutions. At the same time, legacy banks are pushed to modernize, often partnering with fintechs to stay competitive. This new openness has sparked a wave of collaboration and competition, ultimately giving consumers more choice and flexibility in how they manage their money. Neobanks know that earning customer trust is essential, especially when it comes to digital security. To address these concerns, they invest heavily in advanced encryption, biometric authentication, and real-time fraud monitoring. Many neobanks also prioritize transparency, offering clear explanations about how they protect user data and handle potential breaches. By partnering with established financial institutions and complying with strict regulatory standards, they aim to reassure customers that their money and information are safe. These efforts are crucial as neobanks work to build lasting confidence in a rapidly evolving financial landscape. The future of neobanks is at a crossroads. While digital challengers like Revolut and N26 have certainly shaken up the industry with innovative features and rapid growth, the majority of neobanks still struggle to achieve consistent profitability. Traditional banks aren't standing still. They're integrating fintech innovations and even partnering with startups to enhance their own services. As emerging technologies like AI, embedded finance, and decentralized finance gain traction, the competitive landscape is evolving quickly. Whether neobanks maintain their disruptive edge or traditional banks reclaim dominance will depend on who adapts fastest to these new financial realities. The rise of neobanks has shown that consumers are eager for banking experiences that are digital-first, user-friendly, and accessible from anywhere. However, the journey hasn't been without challenges. Most neobanks have struggled to achieve profitability, highlighting the importance of sustainable business models and diversified revenue streams. Traditional banks, meanwhile, are adapting by integrating fintech innovations and collaborating with digital challengers. Looking ahead, the future of financial services will likely be shaped by emerging technologies like AI, decentralized finance, and embedded finance, as well as the growing influence of big tech companies. The neobank revolution has set the stage for ongoing transformation, making the financial sector more dynamic and competitive than ever before. Looking back, it's clear that neobanks have shaken up the financial world, bringing fresh ideas and digital convenience to millions. But while the hype promised a banking revolution, the reality is more nuanced. Most neobanks still face big hurdles, especially when it comes to turning a profit. Even so, their innovations have pushed traditional banks to modernize and embrace new technologies. As we move forward, the real game changers might be emerging trends like digital currencies, decentralized finance, and artificial intelligence. The future of banking is still being written, and it's sure to be shaped by both bold newcomers and established giants working together in surprising ways.